Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Mangalam and Nigel. Guys, hi. Morning.
Hi, morning. It's so funny that news comes a lot later, but the price tells you what's happened earlier itself. For the last 4 trading sessions, we've been hitting lower highs and lower lows, and the Nifty is down swiftly about 700 points from the recent peak that we saw.
Yeah. And it's a new week, Nigel, but not very much is different, I guess, right, in terms of the oil scenario or the war or the ceasefire.
Absolutely. Geopolitics, we have a big deal in the pharma space as well. We'll have the monthly expiry that will play out. And towards the end of the week, we have a long weekend. So let's brace ourselves for a lot of market action. And then we enjoy a longer weekend, hopefully.
Absolutely. And, let's just take it from the top then in terms of what the cues are this morning as we kick this session off. So oil prices are at about $107+ a barrel. This is the near month contract. Remember, the expiry is around the corner. So, if you look at and the same thing happened last month as well. The Brent expiry is, I think, on the 30th. The NYMEX, the WTI expiry is on the 17th of next month. So what typically happens is that oil prices will, essentially what it means is that if you are delivering oil, you're delivering oil at $107 a barrel. FAR month will always be lower because, it's a simple thing, right? 15 months, will the war end in 15 days or will it end in 3 months? The probability of it ending in 15 days perhaps is 20% if you ask anyone. In 3 months, in a month, 2 months, it is higher, 50%, 60%. And hence, with all the hedging and speculative activity, the FAR month is typically slightly lower on the curve. And that's what we're seeing. As I said, we saw the same thing last time around as well. And what happens is, if the stalemate continues, like right now, with no real sort of, give way one way or the other, no progress really, this price will start to move higher to where we are now. The front month, which is about a $6 discount right now, will creep up and catch up. So that's the price. Now, just the news flow, right? President Trump saying, and this was the comment, if they want to talk, they can come to us or they can call us. And this is with regards to Iran. He gave an interview to, by the way, Fox News on Sunday, and many of the comments were made there. On Saturday, Trump had cancelled a planned trip for his negotiators, Witkoff and Jared Kushner, to Pakistan. They were supposed to sort of get on a plane and go, and last minute, apparently, the cancellation happened, and President Trump essentially said, there's no need to go. Trump has also told Fox News, and this is interesting, he said, well, pressure on Iran's clogged up pipelines are at a risk of explosion. Essentially, you've got to listen to the whole thing, but basically what he meant is, because oil production upstream is shut, storage is getting full, there is somehow this pressure on the pipelines where all this oil is, and, it's at a risk of explosion. So he's essentially, at least the comments to Fox News made it seem like President Trump is saying that it's automatic, the clock is ticking, and they can't hold off, Iran can't hold off very much longer, because it will mean widespread sort of upstream shutdowns and then, a burst of pipelines, etc. I don't think oil experts will agree, but that's essentially what he told Fox. Now, Trump, of course, also, there was this dramatic scenes out of the White House Correspondents' Dinner, which happened. He said that this is to deter him from winning the war in Iran. On Sunday, the Iranian foreign minister is expected to travel to Russia. The meeting is expected to take place today, so we'll see if this actually takes place or not. Israel has continued to striking southern Lebanon on Sunday, and Netanyahu. By the way, there is a 3-week ceasefire between Lebanon and Israel. But Netanyahu essentially saying that the Israeli military is aggressively operating in Lebanon, so there is no ceasefire in that sense. And U.S. Central Command issued the statement on Sunday saying that U.S. forces intercepted a sanctioned vessel in the Arabian Sea. I mean, all in all, it just seems like there is no real ceasefire or talks, and President Trump now saying that, well, no need to go, we can do this on the phone line, etc., etc. Hopefully, as Axios reports this morning, it's just the report is about an hour old. Axios, of course, is a well-respected political newspaper, says that Iran has offered US deal to reopen the Strait of Hormuz, but postpone nuclear talks. So take nuclear talks off the table and let's get the strait open. Will it be acceptable? Apparently, they've sort of gotten this proposal to Trump, to US via Pakistan and the intermediaries in Pakistan. But we'll see if this really happens or not. US Department of Justice, I'll just wrap up the US session as well, right? So US markets hit a new record high, S&P 0.6, NASDAQ 1.6%. But as we've said last few days now, actually much longer, how high oil prices hits US and how it's India and large oil importers is very different, because US is a net energy surplus country. So prices at the pump will go up, there will be consumer backlash, etc. And we're not there yet, but at a macro level, there isn't very much impact for markets like US. And of course, they've got the AI thing as well. The other news flow, which is important, of course, is that the Department of Justice in the US has closed the probe into Fed Chair Powell with regards to that building and the spending on building, etc. Intel, 24% higher on Friday. And just contrast that, right? What's happening with AI stocks in the US and elsewhere with the our own IT services index. The IT services index last week was down 10%, down 5% last Friday. And this morning, and we'll talk more about this, Sun Pharma has made a large acquisition. They're taking on a lot of debt. So prima facie, the stock should be down 3, 4, 5%. We'll see. I'll just leave you with the levels here. Nifty on Friday closed around exactly at the support levels of about 23,900. Will we hold those levels is the question. The next supports only come in around 23,500 or so. GIFT Nifty will give you a quick sense of how we're likely to start, and then we'll pick it up from there. 200 points higher on the GIFT Nifty. Maybe it seems a little excessive. We'll find out. Nigel has walked across to the wall with the F&O positioning and the cues. Nigel, take it away.
Well, if we do start off with the gain of close to around 200 points, we should see some kind of profit taking from those highs, because a couple of pain points continue to exist. For example, Brent crude prices. They remain uncomfortably high over the $105 per barrel mark. That's very uncomfortable. And because of these higher crude oil prices, we have seen the Indian rupee as well has weakened over the last few days. There were some restrictions that were put in by the RBI. Some of that was cooled off. And that's why, in fact, we did see that the Indian rupee as well did breach that 94 odd mark after strengthening all the way to around 92.6. And when you see this sort of a combination with Brent crude prices at elevated levels, the Indian rupee weaker as well, the FIs can't buy, right? And that's why you did see they've returned back to the selling basket. They sold close to around $1 billion in Friday's trading session as well. The DIs, they chipped in there. They offset close to around half of what the FIs sold. Close to around 4,700 crores is what they bought. But the FIs, they returned back to their selling ways in the cash market. And on futures, well, they added shorts. Both on index futures, there were close to around 10,000 contracts that were added on the short side. And if you look at it, even on stock futures, there were shorts that were getting added. And over the last few days, the Nifty has pulled back a little bit from around the 24,500 odd mark. And the short positioning from the FIs, they have moved up by close to around 30,000 contracts. So the shorts are back in the system. It's not such a bad thing. Remember, you like some shorts in the system because there is some glimmer of good hope. Then, in fact, you'll have to see that some of these shorts run for cover. Short positioning had come down to around that 75-76% odd. It's moved back up to around 81% from the FI point of view. The FIs, well, they sold in cash. They shorted, the index, and also they wrote more calls than puts. So it seems now the setup from their side is again very, very cautious. They wrote close to around 3 calls for every 1 put in Friday's trading session. And because of the aggressive call writing that we've seen, the PCR has come down sub that 0.8 odd. And there has been aggressive writing at around the 24,000 call, the 23,900 call. Between them, there's close to around 90 lakh shares getting added between them, telling you the call writers, they believe higher levels are going to get defended. And if you just look at the trend over the last few days, the Nifty has been making lower highs. And you'll want that trend actually to break because, on a day-to-day basis, you've been seeing this. So in terms of a level to track for today's trading session, that becomes the important mark if you want to break that trend. 24,206 is the important mark. And I think this 24,206 to around 24,284 is important because that's initially where the 50 DMA comes in at. And that'll be a bit of a resistance mark. On the downside, the 20 DMA has now moved up to around 23,600. So you'll want this mark to hold out. You don't want this level to get breached out. In terms of stocks that I'll be looking at in indices, I'll keep an eye on the tech index. It's got smashed out of shape in the past week itself. But I'll track this index because, it's seen a very, very sharp fall. The rupee is a little bit weakish, and the Nasdaq did bounce back as well. So let's see whether or not we can see some kind of a breather from these levels. And the India VIX, over the last few days, it's moved from around that 16 towards the 20-odd mark. You don't want the VIX to run away, right? That's a sign of fear, volatility, in our markets as well. So you want that to cool off a little bit, closer to around 20. GIFT Nifty starts off in the green. We could see some profit taking. You don't want the low levels to get broken, and you want to see a higher high.
Take that point, Nigel. Thanks a lot for that. A higher high is what the street wants right now. As we speak, the Nifty actually making lower lows over the last 4 trading sessions. Good time to get in our global guest then, Ed Yardeni, President Yardeni Research, joins in. Ed, it seems like the clouds of uncertainty have returned after some hope of truce. What do you do in a situation like this? Do you think the diminishing marginal utility principle applies here as well, that this uncertainty will not see as big a sell-off as the previous one?
Well, I think the market is settling into a new certainty, and that is that this may be the status quo for a while. I mean, things can change pretty quickly, but the market seems to be saying that investors can live with the thought that the U.S. blockades Iranian ports and that the Iranians blockade the Strait of Hormuz, and that the world can get along with that. It's a debatable point, but on the other hand, I think everybody's keying off the price of oil, and the price of oil even today, after expectations of a possible meeting were dashed, the price of oil really isn't even up much, a couple of bucks, so we're still around $100. And I think certainly the U.S. can live with that. Other countries, I think, are going to be harder pressed. But all in all, the markets are saying that the earnings outlook is bright, not just in the U.S., but around the world. And I think a lot of that is actually the artificial intelligence trade has gone totally global. We're seeing it in Japan, South Korea, Taiwan, the United States, and I think other countries are experiencing some of that as well.
No, you're absolutely right. Actually, Ed, it's quite incredible. The weight of Taiwan, I think I'll have to, someone was pointing out, in the MSCI Emerging Market Index now,
Right.
is equal or maybe slightly edging higher than China, thanks, of course, to TSMC. So that is the scale of this thing, right?
Yeah, it's a very good point. And of course, Taiwan is mostly Taiwan semi. So it's almost like saying, one company's got the same, or will soon have the same market weight as China. So that is quite a remarkable story. And that also it reflects on China. I mean, we all know that China is also working hard at artificial intelligence, but somehow or other, the global financial markets on a relative basis prefer Taiwan over China.
Hi, Ed. Good to see you in. What do you make of our own markets, the Indian markets? Well, we did bounce back in style, but we've cooled off a little bit from the top. And for us, we have a macro challenge, right? The rupee is showing some weakness, and crude oil price is higher. So where does India fit in, in terms of global equity market?
Well, I think the story that the markets are discounting with regards to India is really pretty straightforward, and that is India imports a lot of energy. Presume India also imports a lot of fertilizer, and both these commodities are in short supply and are more expensive, and I think that's weighing certainly on the Indian market. I think we really, while the U.S. and some other markets seem to have no problems living with the status quo, that's not the case for a country like India. And so I think we really have to have a clear end to the war in the Middle East for India to do better.
And would that be enough for India to outperform, or are there other factors that you'll be tracking for the Indian market as well?
Well, I think because it is underperformed, investors will be looking around for opportunities where things have lagged behind. So yeah, India could have a catch-up trade.
And you normally give us a view with regard to the mother market, right? The U.S. markets has been rock solid. What's the updated target on that one?
Well, the story there is earnings. They've been remarkably strong. It has been information technology, it's been energy, but overall other sectors have also shown remarkable strength in earnings. And what happened is, the market took a dive from January 27th to March 30th. It was led by a big drop in the PE, but the PE was dropped partly because earnings were so strong. And so right around March 30th, 31, investors suddenly realized that, well, if things are going to kind of get into a ceasefire status quo situation in the Middle East, stocks are a lot cheaper and earnings are an all-time record high, and buying in the dip just came in massively. And so I think this market still has room to go higher. I'm still looking for 7,700 by the end of the year. It could be a little choppy in the near term here on the Middle East, but again, the market's kind of getting used to that. Maybe the next thing we have to kind of deal with is the midterm elections in the U.S. and what that implies about volatility here in the U.S., never mind what's going on geopolitically.
Got that. Ed, we'll leave it there. Thank you very much for joining us. Good speaking with you. Appreciate your time here on CNBC-TV18. Well, let me just quickly run you through the interactions which are lined up here on the program. At 8:35, we bring you a discussion with Macquarie's Kunal Dhamesha on the Sun Pharma deal. It's a big one. 8:45, Piyush Pandey of Centrum talks to us about Reliance Jio's fourth quarter earnings. 9 o'clock, Digant Haria to speak about a slew of financial earnings. 9:20, Harsha Upadhyaya of Kotak Mahindra Asset Management is a market master of the day. 9:30, we have a discussion on M&A deals, IPOs and more. Following that, the management of Hindustan Zinc will be speaking with us at 9:40, 9:50. Shriram Finance, numbers came through on Friday late. And towards the end of the program, the management of IDFC First Bank joins us to record the fourth quarter earnings run through.
Time to slip in a short break. We've got a lot of stocks to track for you in our special top 10 segment. For the time being, I give you a sneak peek. We're going with Sun Pharma, Reliance, L&T Finance, Mahindra & Mahindra Financial Services, IndusInd Bank. All of them will be reacting positively, while you have RBL Bank, Shriram Finance, Canfin Homes that will be reacting positively to news flow. IDFC First Bank opens up in the red, and we could see a mixed reaction on Axis Bank.
Welcome back. You're watching us here on Bazaar Morning Call. Our research team standing by with CNBC TV18's list of top stocks for the day, and none bigger than Sun Pharma. The whispers had been around. There was a lot of stock price movement earlier as well. And this morning, early this morning, the news was confirmed. They will go ahead and buy Organon. Ekta.
Yes, the big deal has been announced for Sun Pharma, and it's a landmark deal for the Indian pharmaceutical space, considering it is the largest acquisition which has taken place by an Indian pharma company. Now, Sun Pharma is going to be acquiring Organon, which is basically a US-listed company, for $11.75 billion in terms of enterprise value. Now, the equity valuation within that is around $4 billion, and the remaining is basically the debt component. But remember that they will be receiving around $440 million in terms of additional cash flow on account of divestiture of a product. So the debt of around $8.6 billion will reduce. Now, in terms of the all-cash transaction, it is going to be an all-cash transaction approved by both boards, and the expected closure is by early 2027. FY25 revenue for Organon was $6.2 billion, adjusted EBITDA around $1.9 billion, debt around $8.6 billion, cash $574 million. Again, there will be that $440 million additional inflow which will come in. Now, what does this bring to Sun Pharma? It aligns, they've said, with their strategy to scale innovative medicines portfolio, will enable them entry into biosimilars as a top 10 global player. It will strengthen their presence in the women's healthcare space as well. So Sun Pharma, basically, with this acquisition, is going to become a $12 billion revenue company and will be one of the top 25 global pharma companies. It will become one of the leading players, according to them, in established brands, which is basically in branded generics. So their innovative medicines portfolio will now contribute around 27% as compared to 20% earlier. They will be a top 3 global player in women's health and will be positioned as the 7th largest global biosimilars company. Now, remember, there was a lot of concern around the debt, but the valuations of around 6.2 times EV to EBITDA, plus a debt which would then possibly be serviced in the next 4 to 5 years, is making most of the analysts comfortable at this point in time.
Thanks a lot for that, Ekta. Well, let's hop across to Sonal. She's here to tell us about Reliance Industries that came out with their set of numbers. Hi, Sonal. Good morning.
Good morning, Nigel. Well, Reliance reported a strong retail business growth, and the other important commentary came in from the management where they indicated that they're advancing steadily towards listing of Jio platforms. As far as numbers are concerned, in line with estimates, steady on a quarter-on-quarter basis. Revenues at 2.94 lakh crore rupees. EBITDA came in at 44,141 crore rupees. Margins at 15% and profits at 16,971 crore rupees. If we talk about the breakup, strong retail business, there was a revenue growth of 11%. Jio subscriber addition came in at 36.2 million YOY, which is the highest that they've seen in last 7 quarters. O2C did see weaker margins on a quarter-on-quarter basis. The refining did well, but because of supply chain issues, petchem spreads were lower. But the main commentary from the management that they're advancing steadily towards the listing of Jio platforms. Brokerages, most of them have a buy or an outperform rating. Nomura says they have a target price of 1680 rupees per share, and Jio IPO from here on remains the key catalyst for the stock. Morgan Stanley also has an overweight rating, target at 1803 rupees per share. They are expecting recovery, which will be driven by energy, chemicals and retail. They continue to be positive on the stock.
Right, Sonal, thanks a lot for that. So that's about Reliance, good performance for the retail business. Jio IPO is something that the street is watching out for as well. But let's go across to Ritu. Ritu, how do you read Axis Bank's numbers? Mixed?
Well, yes, Mangalam, it was a mixed bag, stable operating trends, but there were some one-off headlines, that we have to focus on. The profit came in largely flat year-on-year at about 7,071 crore rupees. However, that included a tax write-back of nearly 2,100 crores thanks to the Citi acquisition, and it was offset by a one-time standard asset provision that the bank made of about 2,001 crore rupees. Now, when we asked the management about it, they said the additional provision is just precautionary in nature. We should not read it as reflective of any kind of stress build-up. On the core front, though, the net interest income growth was very modest, just about 5% growth year-on-year. Margins are flattish sequentially. They've come down to about 3.62%, but, the trend has been declining for at least the last 4 quarters. That said, the big positive from the Axis numbers is the asset quality. That has improved. Gross NPAs have come down to 1.23%. Slippages are down almost 20% sequentially. So those are the positives. Apart from this, the bank has announced a fundraise of about 55,000 crores in debt and equity, but it is only an enabling resolution at this point of time. And there was a 2250 crore rupee capital infusion into Axis Finance that was announced along with Kedara Capital.
Okay, all right. Thanks a lot for that, Ritu. Well, let's hop across to Ananya. She's going to continue with some of those financial numbers that we got. L&T Finance and Mahindra Finance. Ananya, take it away.
L&T Finance and Mahindra Financial Services both delivered a healthy Q4 with stable business momentum. Now coming to L&T Finance, the quarter was driven by healthy NII growth of 24.5% YOY, helped by margin expansion with NIMs expansion improving to 8.8% compared to 8.2% last year and 8.6% in Q3. Now operating profit grew 26.6% YOY and 2.4% quarter-on-quarter, while net profit increased 27.3% YOY. Now asset quality also improved sharply, with GNPA declining to 2.9% from 3.3% YOY and 3.2% quarter-on-quarter, while credit costs improved to 2.5%. Now growth momentum also remains strong, with AUM up 24.8% YOY and disbursements up 61.5% YOY. However, higher OPEX weighed on profitability, making cost control the key monitorable going forward. Now coming to Mahindra and Mahindra Financial Services, NII grew 24.1% YOY and 3.9% quarter-on-quarter, and PAT grew 55% YOY and 7.7% quarter-on-quarter despite higher provisions. Now margins improved to 7.3%. Business assets grew 11.8% YOY and 3.8% quarter-on-quarter. Now on guidance, Mahindra and Mahindra Financial Services maintain its medium-term growth outlook of 16 to 18%, NIM guidance of 7.1%, and FY26 credit cost guidance of 1.3 to 1.7%. Now management also reiterated ROA target of 2% and ROE target of 15%. However, they created a 217 crore provision for macro risk going forward, and possible stress in the tractor portfolio, and highlighted that West Asia crisis may temporarily impact Tamil Nadu, Assam and West Bengal. Overall, for both the companies, the quarter was stable. For L&T Finance, the cost control becomes a key monitorable, while for Mahindra and Mahindra Finance, we need to watch for the macro risk going forward.
All right. Thanks very much, Ananya, for that. Well, IndusInd Bank is what we're going to focus on next. And Ritu is here with details and news flow. Ritu, morning.
Morning, Prashant. Even for Hindustan Bank, it's far from back where it was before, the entire episode of Forex derivatives exploded. But the numbers look good overall. The bank has swung back to profit about 533 crores compared to a loss of about 2,300 crores that it reported a year ago. And this is above what the street was factoring in. The core income growth was also steady, although not very strong. NII is up 43% year on year, but it dipped about 4% sequentially. Margins look like they're stabilizing, inching up to about 3.39% in the quarter. That was helped by a lower cost of funds as well. But the biggest positive, again, even for Hindustan Bank, has been on asset quality because the credit cost has come down to as low as 1.9% and slippages are down almost 30% quarter on quarter. And there's improvement across segments that the bank has reported. Now, going ahead, the management is talking about loan growth tracking industry levels, and they're targeting a return on assets of about 1% for FY27.
Right, Ritu, thanks a lot for that. Let's go back to Ananya for IDFC First and RBL Bank. Ananya.
Now, coming to RBL Bank and IDFC First Bank, they both reported different Q4, but the common takeaway was improving asset quality and better setup for FY27. Now, coming to RBL Bank, the quarter was strong and cleaner. NII grew 6.9% YOY. Net profit was the biggest highlight, jumping 233% YOY, supported by lower provision. Now, asset quality also improved meaningfully, with GNPA at 1.45% and NPA at 0.39% and PCR improving to 73.6%. However, margins remain under pressure with NIM at 4.41%. Now, management commentary was constructive. Management guided that the portfolio mix will broadly remain 40 to 45% corporate and commercial, 30 to 35 to 40% secured retail, and 20 to 25% unsecured MFI and credit card. Now, deposit growth may be slower in FY27 in the single digit or double digit, low double digit range. Now, NIMs may remain flat in Q1 but will improve from Q2 onwards, the management mentioned, and also credit card stress may stay elevated in the first half of FY27. Now, coming to IDFC First Bank, the quarter was mixed. Operating profit declined 48% quarter on quarter and PAT fell 37% quarter on quarter, mainly due to fraud-related costs. Now, however, the underlying business remained healthy. The loan growth was strong at around 20% YOY. Management guided for around 20% YOY deposit growth in FY27, supported by normalized momentum from April. Now, asset quality also improved with GNPA at 1.61% and NPA at 0.48% and credit cost at 1.63%. Now, management expects credit cost to reduce further going forward, while NIM should remain broadly stable around 5.75%. Now, overall for RBL Bank, the quarter was stronger, and for IDFC Bank, the results were mixed, and they will perform better going forward when the things normalize from April onwards.
Okay, got that, Ananya. Thanks a lot for that, Ananya. But you're tracking a few more numbers, I believe. Shriram Finance as well as Canfin Homes. Tell us about those numbers.
Now, Canfin Homes and Shriram Finance both delivered strong Q4. Now, coming to Canfin Homes, the quarter was led by healthy disbursements. NII grew 21% YOY, while PPOP was up 20% YOY. Reported PAT looked very strong with 48% YOY and 31% quarter-on-quarter growth. But this included a one-time tax-related gain of 59.5 crore. Now, after adjustment, PAT grew 22% YOY and 8% quarter-on-quarter, which is also healthy. Now, margins also improved with NIM rising to 4.19%, supported by lower borrowing costs up around 7%. Now, overall, Canfin Homes, it was a strong quarter for them. Now, coming to Shriram Finance, the quarter was steady. AUM growing 14.8% YOY and 3.6% quarter-on-quarter, mainly driven by CV and passenger vehicle segment. Now, NII increased 21% YOY, although margins saw slight sequential compression. Now, the key highlight was strong cost control, which helped operating profit grew 22.8% YOY and PAT rising 41% YOY. Now, asset quality also remained largely stable, with gross stage 3 at 4.6%, net stage 3 at 2.3%, and credit costs under control at 1.9%. Now, management commentary for Shriram Finance remains stable, with guidance of around 18%. AUM growth in FY27, NIMs near 8.5%, OPEX growth of 10 to 12%, and stable credit costs. Now, overall, for both the companies, the quarter was healthy and stable going forward.
All right, we take that point. Thanks a lot, Ananya, for joining in and giving us an update of all those financial numbers that came by, and we thank our entire team as well. In case you missed it, here's a quick recap of all our top stocks that we're tracking this morning. Stocks with positive news flow: Sun Pharma on the back of that acquisition, Reliance Industries, their results, L&T Finance, M&M Financial Services, Hindustan Bank, RBL Bank, Shriram Finance, and Canfin Homes. A bunch of financials, all of them on our radar on the back of their good numbers. But IDFC First Bank, the stock on our radar that's likely to open in the red on those numbers. Axis Bank, as Ritu said, likely to see a mixed result. With that, let's go back to Ritu right now. Ritu, apart from all the news around results, on Friday evening we got that news around Paytm Payments Bank as well. It's more of the same?
Yes, actually, see this as a continuation of the multi-year crackdown that RBI has had on Paytm Payment Bank, and this is the payment bank entity which was pretty much non-functional, for the last 2 years at least. The license has been cancelled effective the 24th of April, that is Friday, and RBI is now going to initiate a winding up through the High Court. Now, the wording of the RBI statement is, what's taken a few people by surprise. It is harsh because RBI says the bank operations were being conducted in a manner detrimental to depositors' interest. The general character of the bank management was prejudicial to public interest. There was no useful purpose or public interest being served by allowing them to continue, and their failure to meet license conditions, regulatory norms, all of that forced RBI's hand. Now, keep in mind, a new customer onboarding had been stopped for Paytm Payment Bank back in March of 2022. So that is 4 years ago. And between January and February 2024, business was pretty much frozen. No deposit top-ups, no credits were restricted, etc. Paytm then migrated to a third-party application, moved all the UPI handles to other partner banks. Now, in its response, Paytm does highlight that there is no material business link with, the payment bank. They'd already impaired about 227 crores of investment in the bank as of FY24 end. And now the board and shareholders of the bank have even passed a resolution to wind up the operations of the company. Now, keep in mind, the real casualty of all of this really is a wallet business, which used to contribute as much as 500 crores EBITDA annually before RBI's crackdown. So that is something that remains a question mark, whether Paytm will apply for this new license or not, and whether all of this is going to weigh on that new license application. Separately, we understand about 800 crores of customer deposits are still stuck in the bank, which includes half in frozen accounts and another half which has not been claimed by customers in the last 2 years. So that's where things stand. But for now, no financial impact. It is a continuation of the action. Going forward, of course, the regulatory overhang may be a negative.
Okay, all right. Thanks very much for that, Ritu. So keep an eye out on those stocks as we open up for trade. There's a lot, right? I mean, it's a full deck with regards to earnings and other news flow as we open up this morning. Manisha is here with a roundup of all the action as far as commodities go. Manisha, good morning.
Morning, Prashant. Thank you for that. I'll start with the crude oil prices, where we started Asian markets with nearly 2% of gains. That stands at a percentage point just about right now. So we are off the highs of the day, which was at around $107 a barrel. While, of course, the U.S.-Iran peace talks have stalled and the Strait of Hormuz mostly remains shut, and the U.S.-Iran war has entered ninth week. IEA has said that the U.S.-Iran conflict is the largest or the biggest in energy supply shock on record, but IEA also says that they are looking at demand concerns. So that is what the markets see as a balancing right now. And then there are various reports, one from JP Morgan, the other from Goldman Sachs, suggesting that as and when the war does get over with and Strait of Hormuz open, the rapid oil recovery that the markets will see is perhaps what the futures months are factoring that in. So while the physical is trading at around $120, $125 a barrel, the far month is trading at 106, and the furthest month is trading at $100 a barrel. So we are looking at a strong backwardation coming in for the crude oil prices. What has seen gains, though, has been the metal prices. So nickel is trading at 22-month highs, copper near 2-month highs, aluminum continues to be supported as well. So these metal prices, yet again, another week, which has started on a stronger note.
All right, Manisha, thanks a lot for that. For the time being, we slip into a short break. Next up, we'll get a discussion with Macquarie Capital's Kunal, who will be joining in to analyze the big Sun Pharma deal that was announced earlier today. We'll also connect with Dharmesh Kant of Chola Securities for some fundamental stock talk. Stay tuned. Welcome back. Well, the big stock in focus today will be Sun Pharma. Sun Pharma company, they've gone ahead, they've announced the acquisition of US drug maker Organon in an all-cash deal for an enterprise value of around $11.75 billion. Ekta earlier spoke to Macquarie's Kunal on the deal contours and what does he make of this deal. Let's listen into a slice of that conversation.
So, I think the valuation that they have come up with of EV of 11.75 billion is definitely lower than what was was there in the market of around $13 billion in the last week, right? So to that extent, the stock had already reacted to that 13 billion valuation making rounds, and hence having 11.75 billion is more or less, I would say, a good sign, in terms of better negotiation. So very difficult to predict the exact stock reaction, but I think what I had highlighted in my report was the compelling strategic and the financial fit of this acquisition for Sun Pharma. And I continue to believe that there is a strong rationale both on strategic and financial side, and with valuation coming down. And company has also suggested that they could unlock synergies of around $350 million over the next 2 to 4 years. I believe that this is going to be a significantly accretive valuation, both on earnings, reported earnings, as well as the cash EPS.
Okay. So, Kunal, but what according to you is possibly the biggest concern that the street would have with this acquisition?
The biggest concern would be, as you highlighted, it's a landmark deal, right? It's the biggest pharmaceutical acquisition, outbound acquisition that we have seen. And the company that they are acquiring is also of a similar size to Sun Pharma. So integration would obviously, have its own kind of, they'll need to basically dedicate a lot of management bandwidth to integrate this. So given it's a large size deal. And both the countries have presence across many markets. So Sun Pharma has presence across 100 markets. Organon has 140 markets. So integrating such a large deal across so many markets, first of all, you will need a lot of approvals from the Competition Commission of all the major countries, and then integrating in terms of the people, culture, etc. Is something that people have been highlighting to me as the potential risk.
Well, the stock has been under pressure simply because the street is fearing the debt component of the enterprise value. How do you think that Sun Pharma could possibly solve the debt issue? How long do you think it will possibly look to service the debt issue? Because from being a net cash company, they've now all of a sudden become a net debt company.
So I think the company has suggested that the post-close net debt to EBITDA would be around 2.3 times, and both the companies, have generated very strong operating cash flows. Sun Pharma last couple of years they have generated around $1.5 billion of cash flow per year. Organon has been generating around $1 billion cash flow, right? So of the $2.5 billion operating cash flow, they can easily service the debt. In terms of the debt, cost of debt, as of now, if you look at the weighted average cost of debt for Organon, it's roughly around 5.9 percentage point, right? So, the cost of capital remains low, and strong operating cash flow, they can definitely deliver very fast. So my sense is that they will be able to become again net cash company over the next 3 to 4 years.
Okay, so you expect them to possibly service the debt component in the next 3 to 4 years. According to you, what might be the biggest benefit of this acquisition for Sun Pharma? And it really propels them to a different league.
Yeah, so the biggest benefit is in terms of market development, right? So Sun Pharma has been building its innovation portfolio and has been launching all these products in the US market. But if you look at out of US market, the presence is quite patchy, with only Illumia and Odomzo being launched in Europe. Primarily because the lack of the commercial front-end infrastructure in a lot of these markets like Europe, China, etc. So they were leaving a lot of value on the table for their innovation medicine business, which in my view, now with a strong Organon presence in all these large market, they have a very strong commercial presence. Sun Pharma will be able to leverage that capability to kind of capitalize on the products that they already have and some of the products that they have in the pipeline. Moreover, the innovative medicine business revenue, which is currently contributing 20% for Sun Pharma, with this deal would jump to around 27% of the overall combined entity, right? So that's first benefit, and then second, like capitalizing on that commercial front end infrastructure. Those are the two which are the biggest benefits that I see. And third distant would be the very scaled presence in biosimilar business with almost a $700 million revenue and 24% EBITDA margin. This is a very strong entry into the biosimilar place. And that kind of helps growing that stagnant, unbranded generic business, especially in the wake of next 10-year loss of exclusivity, primarily focused on biologics versus small molecules. So this is a very strong presence and strong entry into the biosimilar.
Okay, well, that's a Macquarie analyst there. Dharmesh Kant is head of research at Chola Securities. Dharmesh, good morning. Good to have you with us here. Just a straightforward question on Sun, the stock today. What is your sense? You know, some would say it's corrected a little bit coming into the announcement today. But on the other side, there is a large debt element which kind of comes in, and they're acquiring a business which is kind of not growing very much. So overall growth for Sun also comes into the single digits, kind of territory from around 13-14% where it was at. What is your sense?
Yeah, good morning, Prashant. Thanks for having me for the show. I mean, similar observation was mine, because Organon, which they have acquired, doesn't, last 3 years, there are very tepid kind of a growth trajectory. 1.5 to 2% is the growth they have been doing. And most of their products are out of the patent now. It's a generic kind of a product portfolio they are having. And scalability of, be it women's healthcare product or, biosimilars, Organon has not been able to do it. They're expecting that Sun Pharma, with scale, size, and earlier, expertise, may be able to turn around and market it. The process and for approvals and every medicine remains the same for Sun Pharma as well. Maybe they are better equipped to scale further. For Sun Pharma, if you look at the numbers perspective point of view, since it's an all-cash deal, it would be ROE and EPS accretive. Because the margins are similar for both the companies, and it will be doubling of the scale of revenues will be doubled from there. So that way, on historical valuation multiples, it does give a comfort if you are valuing Sun Pharma 1 year or 2 year forward. And there, I think some trading bets would be placed. But definitely, the growth rate on the revenue scale of Sun Pharma, which they have been doing for the last, say, 5 years, 10 years, will come under single digit on a blended basis when both the entities merge. So that's our concern as well. But I think if today there's a stock price decline, one can go in for a trading play for Sun Pharma. There would be definitely a trading play out there just to match the valuation multiples.
All right, just to match the valuation multiples, there could be a trading play out here just today, given the sort of decline that we've seen already. What do you make of all the other numbers that have come by over, the last few days? In fact, the last 3 days we had Reliance, we had Hindustan Bank, we had Axis Bank, there was L&T Finance, there was MMFSL. Is there anything that stood out for you?
Yeah, good morning, Maglam. I mean, see, as far as, banks are concerned, the wild card has been the provisioning. Because of lower provisioning across the board, they have been able to report better set of numbers, so which was a surprise. Because if you look at Axis Bank numbers, they directly provided for 2,000 odd crores for geopolitical, the political issues in the Middle East crisis which is happening. It cannot be a particular bank exists in isolation, they are having the headwinds, others are not. So this is debatable. As of now, most of the managements have cited that there can be a problem, but till now, since the problem has not been there, they have not front-loaded the provisioning. So Q1, we are going with a muted expectation. I think that Q1 will be a difficult and challenging for most of the banks when the provisions will come back, which will be a drawdown on the profitability. Business-wise, more or less, they have done well. Asset quality has been contained, NIMS has been stable. And Axis Bank in particular, there's a bit of a negative because their cost to income ratio has gone up. And that's a challenge for them. 51% it has climbed up, so too. So there will be some fallout there. Hindustan Bank definitely came out with a very strong set of numbers, and it's a bank in the making. So that I have been highlighting that for quite some time. I think with 1% kind of an ROE expectation by the end of the year and still trading at less than 1-time price to book, it's a good catch point out there. Reliance Industries in particular, I would like to highlight that the numbers were kind of a mixed and a muted kind of a number. While to chemicals or while to gas, the problem persists, it will be persisting in Q1 as well. So there would be degrowth in the both EBITDA numbers out there. So I mean 3 to 4% kind of a drawdown can be there on the EPS to that extent. As far as retail is concerned, the biggest to my mind the drawdown has been the quick commerce business, which is drawing the margins down. It has come to 7.7% on the EBITDA front. It was a plus 8%. So that is limiting the growth on the PAT basis, 2% kind of a growth on the retail front. So that's a disappointment. Geo platforms, I mean, it's a saturated state where they have reached to. If you look at the RPUs, last 3 quarters, 211, 213.7, and then 214 rupees. So there's no headroom out there to increase the outputs, though they have been going the data volume business out there. So structurally, to my mind, this year and next year, it's more of a capex and commissioning of new energy plays for Reliance Industries, where the valuation, SOTP based valuation comfort will come into. Till that time, it will more a range bound time correction kind of a play will there. My own sense is 8 to 9% kind of a EPS growth for FY27 if things reverses from where for Reliance Industries. So it's a portfolio buy for a long-term perspective. Immediate trading gains is difficult to come by, and new energy will take at least 2 years, to have a meaningful contribution to the EBITDA front. So a good portfolio buy, but don't expect, immediate fireworks in Reliance Industries. And just to highlight, Geo platforms, to our mind, $100 to $110 billion should be the valuation. People are quoting a higher set of numbers, but if you look at Bharti, 20% kind of a discount will be there because Bharti has a good headroom for South African play, where they can still manage to have the increase in the outputs, which Reliance does not have. So that is how we are seeing Reliance Industries.
I just want to make one other point, Nigel Mangalam. On social media, there was all this hullabaloo around how hot it is, right? Did you guys see those red map all across? I mean, I think apparently India is now, across cities, if you count the top hottest cities now, I think the top 10, 15, 20 are in India. And what has happened, of course, is that power demand, peak power demand in India has hit an all-time high. Yes. And this is, that's a graph. IMD, of course, has issued a heat wave, and specifically for northwest and central India, the warning has come this morning. But suddenly over the last 10 days or so, the temperature has climbed absolutely vertically. So that's the number I'm talking about. Over the weekend, this happened on Saturday. The peak power demand hit 256 gigawatts. In 2025, that number, the peak was about 243 gigawatts or so. Now, just a few nuances. That 256 number actually is, I think it was hit around 3:30 p.m. in the afternoon. First of all, I mean, peak power demand over the weekend on a Saturday is unusual. Usually it'll be on a working day, but on Saturday, and this number is from 3:30 p.m. Now, the nuance is that, bulk of that demand can be met through solar because the sun is still shining. So what matters is essentially evening peak power demand when solar and solar power is not available, because we have about 160 odd gigawatts of solar capacity available, which can kind of compensate for a lot of this peak power demand during the day. But in the evening, that situation is no longer available. That power is no longer available. So that number, the evening number, we kind of still don't have. We're still trying to figure for Saturday, for example, if that did spike to a new high as well. But you're seeing this 256 number all across, and that's very high. And there are some indications that perhaps this season, this summer season, we're already in April, as we head into the next 2 months, which are going to be hotter, will we hit? There are some indications of 270, which is going to be pretty, very, very strong, very, very high. And that number will be met. But the important thing is, when does that peak demand happen? Does it happen during the morning hours, or it happens in the evening hours? And if it's the evening hours, then I think we'll have to make contingency plans, etc., so that there are no blackouts, etc., to avoid that kind of thing. Stocks, remember, have done very well. Will this, and the question to ask is for Adani Power, if you can have the stocks up, Adani and the JSW Energy and the Tatas and all of the IPPs, independent power producers, will this number again spark off a bit of a rally today? I mean, it's possible that you see a bit of a move, but they're all, in the month of April, already up between 45 and 50%. So keep that in mind. that you're getting into a bit of a sugar rush territory with bulk of these names. So don't get too carried away. These numbers are high and the demand environment does look very, very strong, especially on a peak power basis. If you look at the overall electricity consumption, I mean, the point is it's still very weak. The base is very weak. We're looking at 3-4 months back, absolutely no growth on a year-on-year basis, and now we are seeing some growth. So maybe markets do get excited and we'll keep an eye as stocks open, but they've already rallied very, very hard. So I think that is important contextual information that you must keep in mind. I mean, there are other implications as well for AC sales and all of that stuff, right, which we can talk about as we go on, but just wanted to kind of sort of make a quick mention of it. We'll take a quick break here. We'll come back with Piyush Pandey of Centrum, who'll be with us on Reliance Jio's fourth quarter earnings in just a bit.
Welcome back. You're watching us here on Bazaar Morning Call. A lot of news to contend with global and local. Meanwhile, the Asian markets, however, they're doing a lot better than what the headlines would indicate otherwise. Peace talks stalling, the uncertainty, Brent at 106.5. Nikkei has no problems there. It's up around 1.5%. The Korean index as well, up 2.2%. We have the Taiwanese index, which is up around 2.5% as well. Hang Seng, the only one which is absolutely flat. The GIFT Nifty, in light of that, is also indicating a positive start. Remember, at all of last week, we did see a decline in our frontline indices from a peak of close to around 24,600 thereabouts. We closed below that 24,000 mark on Friday. So the Asian market is doing a lot better despite all the global news that have come by and the Brent prices. So we'll monitor as we go along in today's trading session whether this gap up of 220 points actually happens when the market opens, and thereafter whether it sustains beyond that or not as well. With that, we'll take a short break, come back on the other side, pre-opening, and Piyush Pandey of Centrum joins in to discuss Reliance's earnings. Remember, that will be an important parameter to track the market today as well. Digant Haria of Greenwich Wealth also joins in to speak about a slew of the financial companies that reported their numbers. Welcome back. You're watching us here on Bazaar Morning Call. A minute to go for pre-open, 15 minutes to go for the markets to open. We do have earnings to contend with. Piyush Pandey, who's the Senior Vice President at Centrum India, joins in to discuss what he made of Reliance Jio's numbers in particular. But Piyush, beyond just the numbers, the commentary that came in, they are moving to, looking at Reliance Jio platforms listing. How would you view that as a factor on the stock, how it moves today?
Yeah, currently Reliance Jio at close to $130 billion at current valuations. And primarily, I would say trigger would be like the next tariff hike, which comes in, say, in the month of July or August. But as of now, I would say it can be a big trigger for the overall Reliance Industries. It might take longer, but in terms of value unlocking, I think it would be a great step.
All right. And you said $150 billion, and you're working with a base case of July and August. What about...
base case is $130 billion.
$130 billion. All right. And what do you make of the reported numbers, though? Subscriber additions up 35% year on year. We had the revenues up around 11% as well. They've added, nearly 3.5 crore subscribers, 36 million to be precise. The ARPU is doing extremely well, up nearly 4% year on year on that one as well. What do you make of the numbers by themselves?
For Jio, customer addition has been very strong, and it has been historically also. Like, they have added customers at a decent pace, and even in this quarter they added 9 million customers. But I would say one of the matter of concern has been the growth in ARPU. So this quarter ARPU was fairly flat, was mostly flat, primarily impacted due to lesser number of days in the quarter because Q4 has 2 days less compared to Q3. So had it been equal number of days, we would have seen close to say 1.5 to 2% increase in ARPU. Having said that, tariff hike would be the key driver of ARPU for Reliance Jio. And besides tariff hike, I would say Reliance Jio needs to have other lever also that can drive ARPU. Like, say, for example, they can ramp up their, postpaid customer base or, other add-on services. See, our base case is like say Reliance Jio along with Bharti, they can do say around 10% increase in ARPU over the next 5 years, CAGR ARPU growth, and 3-4% increase in volume. So base cases on the wireless business, we can see around say 12 to 13% CAGR revenue growth, and that looks decent, I would say.
All right. Hi, Piyush. Good morning. Good to hear your thoughts. So on Jio, you're valuing it at $130 billion. Did I hear that correct?
Yes. $130 billion, yes.
Yeah, and how does it compare with, say, Bharti? Are you giving it a bit of a discount? Is it at par?
For the India wireless business, we are giving the same multiple, right? We have it of 13 times for the India wireless business. And Bharti has other business like, say, Africa, then Indus Towers. They get a slightly lower multiple. But if you compare on the like-to-like basis, we are giving it similar valuation multiple.
All right. And would you look at Vodafone at some point in time? The last couple of quarters, the subscriber hemorrhaging has come down. In fact, they've added a few subscribers. Do you think that calls for any sort of attention, or maybe you just stick with Reliance and Bharti?
See, Vodafone has started adding customers, but I think they are mostly M2M customers. And M2M customers are primarily low ARPU customers. But having said that, they have significantly improved their network. And so losses have come down and they have got in a positive territory. But I would say, even with improvement, it would be difficult for Vodafone to gain market share. So even with some positive, it would be somewhat challenging for them to maintain their market share also. Now it depends on, to what extent their AGR does come down after the reassessment. Plus, if they're able to raise fresh equity funds, then that can, I think, excite interest among the investors. But having said that, I think the worst is behind for Vodafone Idea, and things are incrementally improving on multiple fronts, like say customer addition or like say AGR dues, or if they raise fresh funds. Yeah.
All right, we take that point. Thanks a lot, Piyush, for joining in and giving us those details. Meanwhile, stock to monitor today will also be Cohance Life, because Umang Vohra, obviously the earlier CEO of Cipla, has now joined Cohance Life, which is the earlier known as Suven Pharma, is now appointed as the chairman and group CEO. Will there be a big impact on account of the management change? Well, the kind of reputation that Umang Vohra carries, perhaps the street would like that, and pre-opened that stock up nearly 4.5%. So all about pharmaceuticals. But let's get to our technical experts. Mitesh Thakkar of Bonanza Portfolio and Sudarshan Sukhani joins in now for technical trends. Sudarshan, what do you think? Lower levels sought? The GIFT Nifty is indicating a 200-point uptick. Would you believe that, or look that as a selling opportunity?
Good morning. No, we were waiting for the markets to go through a deep and sharp correction. That happened by Friday afternoon when the Nifty was down 700 points from the highs it made last week. That's good enough. Now, today is a good day to buy. I would not take the gap up as a selling opportunity. We are flat in the market unless somebody bought on Friday afternoon. So the trade is to go long in the Nifty, divide your quantity volume into two parts. One half, you just go long after the markets cool off, say 10-15 minutes later. And the second, wait for a 200-point dip or a decline and then add to that position. But irrespective of that, the fact remains that after the sharp 800-point correction, the markets are willing to go higher.
Okay. Sudarshan sounding far more optimistic this morning. Got that, Sudarshan? Mitesh, what about you?
Morning. So I think two things. One, the market kind of managed to hold on to an important support around 23,800, 850, which was a historical gap. My sense is that the way market shaped up in the last 2-3 trading sessions, it is a market which might now contract and be slightly choppy within a range. So I'll mark down 23,850, 800 as the zone on the downside, while 24,350, 400 as the zone on the upside. So I think we might do this range. Therefore, I think trading would be good near the edges. So after 200-point gap up opening, not very keen to buy. In case we get an intraday decline post that, maybe we'll look at buying opportunities.
Okay, got that. What about individual stocks, Mitesh? You go first.
On the stock side, I have all buy calls today. Chola Finance is a buy with a stop at 1544 for targets of 1615. Then buy on Inox Wind. It gave a good 2-day pullback and it's above all its averages. So buy here with a stop below 96 for a target of 110. Cipla was in news, and there was a breakout which happened on Thursday and Friday with a sideways candle. So Cipla is a buy with a stop at 1274 for a target of 1335, and a buy on IREDA with a stop at 132 for a price target of 144.
Okay, got that. Since Mitesh just spoke about Cipla, I just want to point out that at least in the pre-open, it appears Sun Pharma is going to be opening more or less flattish, or maybe a tinge of green is what I could see the last time. We should just pull that stock up. Probable reasons would be that the stock is already down 11% in the last 1 month or so. And Mr. Sanghvi is saying this morning that it'll be EPS accretive from year one itself. So we'll wait by. Sun Pharma is the one that we're talking about. They are the ones that have gone in there with a big ambitious deal with an EV of more than $11 billion. For the time being, a more stable opening, maybe because the stock has already underperformed in the run-up to this very adventurous acquisition. Let's
Just one thing, right? Yeah. If you can look at the Nifty in the pre-open session, I don't know if you have the rate coming up. I think it's settling down. Okay, this is more like it. I was very surprised. 200 points in the GIFT Nifty, etc. The other thing we've not talked about so far, right? 29th, the sort of polling ends, elections end. Post the 29th, it's most likely, there's no choice. The government is not going to shoulder the entire burden of the increase in fuel prices. So fuel prices are set to go up. How much is the question? Will they go up enough to cause a shock to the system? And markets could react. If it's a large enough increase on the day after the increase, whenever it happens, post the 29th, it can happen any time. Will the government wait till the 4th when the election results come out? They can do it now, they can do it post 4th. But the point is, they will go up. The degree is the question. So that's the other, it's for those who are trading, it's an important event because, all those numbers, which the government said, well, they're not going to do it. Nothing is under consideration. But that Kotak report was that 20 plus rupees something, right? 25 rupees or something is what is required. It may happen in a staggered fashion. But it's an important event. Especially if you are trading in and out and trying to do this in that sense. Sudarshan is with us. Sudarshan, what's on your radar? Morning.
Yeah, good morning. Well, Coal India is a buy with a stop under 445. State Bank is a buy, SBIN with a stop under 1080. I have two short sells, Astral, stop above 1595, and HDFC Life, stop above 600. I would be a buyer if the markets open flat.
Okay. A buyer if the markets open flat. Sudarshan and Mitesh, thank you very much. We'll chat again soon. Digant Haria is with us, founder of Green Edge Wealth Services. Digant, good to have you with us here. Thanks very much. Out of the numbers we've gotten between the last time we spoke and now, what stands out for you? Digant.
Morning. Thank you. Prashant, so I think, the entire banking sector is reporting good set of numbers. I think, and it was expected, this war and this entire impact happens later in the quarters, if at all. So I think, what stands out is, IndusInd Bank, the microfinance division has definitely turned around. It probably gave 600 crores of profit and the bank reported 600 crores of profit. So I think IndusInd Bank is, the worst is really behind. We can say that with a lot of confidence. Similarly, for Axis Bank, we can say the same thing, that it is a second quarter where credit costs were firmly under control and, margins also were maintained QOQ. So I think the growth has picked up. I think results, Prashant, are good. I wish, this whole Iran war, if that was not there, this sector would have really fired up.
Okay. Because, there is this impending stress, which the markets kind of seems to not have a handle on. It's not expected to be very large, but the longer it continues, perhaps it could be, right? Digant?
Yeah, absolutely. See, like Shriram Finance also gave brilliant results. Like they are guiding for 17-18%. But, they also said that, we need to see one quarter, what happens with the fuel price hike, the availability. And now there is this El Nino also, which they say that, India may have a very harsh summer and a delayed monsoon. So I think the macros are, against us, but the micros are absolutely strong and brilliant, Prashant.
Yeah. And we'll see. The fuel price hike. What's your sense, Digant? You think it could be a large one? It could be what? Have you thought about it? Because that impacts everything, right? So far, consumers have been shielded.
Yeah. So far, the OMCs and the government are taking the entire hit. And I think, after these elections, I think you guys were discussing a few minutes back, after the elections, we will see a price hike. And I think the India can take on that price hike because when you look at the SME sector, the agri sector, they are more impacted by local events and less by this whole fuel shock. Only thing is, Prashant, if the availability of things, of gas, oil, fertilizer, the feedstocks, if all this is not impacted, maybe, we have 1 quarter of caution and then we move on and, then this entire interest rate sensitive pack, which is, banking, NBFCs, autos, they may actually start doing well. See, they're just not doing well because of the macro front. On the micro front, there isn't really any slowdown. And even these banks say that we have not seen any adverse movement as of yet. Everybody is waiting for something bad to happen. It just seems like that.
Yeah,
but we are not seeing anything right now.
Yeah, no, absolutely. Digant, from your coverage universe or otherwise, anything to do actionable at this point in financials?
In financials, there are 2 pockets which are turning around and which will do well irrespective of what happens to the fuel price hike and the war. One is microfinance. There the trends are extremely strong. Like, IndusInd Bank was the worst sufferer and that has reported a very strong set of numbers. So I think microfinance space will do very well. And, the good players, the L&D Finance and Ujjivans of the world, Arman. I think we can see some, good results coming from there. And even the gold loan space, I think the gold loan space continues to do very well. People get, scared when the gold price volatility is there. But at least the sector is on a very strong footing. So I think these 2 pockets can be, a pocket of calm or, pocket of outperformance as we wait for, the macros to settle in the next 3-6 months. So I think investors in financials should focus on these 2 pockets now. And once we have some bit of macro clarity, I think even these regional banks, DCB gave a good set of numbers. I think today Tamil Nadu Bank will report. I think those numbers will also be, very good based on their, early quarterly numbers which they gave. So I think things are looking okay. These 2 pockets for now, Prashant, and maybe once we have macro clarity, you can, widen your basket.
Hi, Digant. Always good to see you, and hear your thoughts. Tell us about Paytm. What's the view out there? I think in pre-open, that stock is going to be starting off a little bit on the back foot. What do you make of the news flow and what would you do?
I think, Nigel, this issue, has a past and it has no business impact. Let me tell you, it has zero business impact because none of the 3 businesses, the payments business, they have this lending business or a DSA kind of a business, and then they have this wealth / advertising business. It won't affect any of the businesses, but see the language which has been written by RBI, it just tells us that, everything is not too fine with these 2, between RBI and Paytm. So that is one way of looking at it. So there may be some sentimental impact. I don't see any business impact. Paytm keeps on gaining market share, be it in consumer payments or in merchant acquiring business. So that is not a concern. And if I have to become optimistic, I will even say that, this closes a past chapter and maybe Paytm can apply for a fresh NBFC license. And if they get an NBFC license, I think their lending business gets a booster shot later on. But this is taking it too far.
Digant, you would be a buyer on this dip this morning?
Probably not this morning, but I'll just wait for a week and see. I think the business is doing very well.
Got it. Digant, sorry, apologies. We'll leave it there. Appreciate your time here. We've got about a 0.5% higher move on the Nifty, 24,013. The Nifty Bank is up 0.5%. We're at about 56,300. You've got the mid-cap index and the small-cap indices, which are up about 1% apiece as well. This is a pretty good start all told. We've got advanced decline out of the gates, which is looking very strong. 1450 stocks are higher, some 360 stocks are lower, but that will change and settle down into in some ways. Sun Pharma is up 2%, so that's interesting. And maybe commentary from the management, and we perhaps should get Ekta back on with a summary of all the commentary from Dilip Shangvi and others at Sun in terms of what they are projecting. So the stock is up 2% this morning after that very, very large deal which has been announced. We've got what else? I think the Nifty heat map should give you a quick sense of where everything is landing at 9:15 on the Nifty at least, and we'll go into individual single stocks. So it's all up. Sun Pharma, Adani Ports, Kotak, Eternal, Wipro, and the Nifty is now moved up 140 points. On the other side, you've got Axis, Shriram Finance, and Reliance Industries, which are the 3 names in the red right now. So the question to my mind is, are we going to sort of, trade with a 150-odd point gain, or is it going to disappear with more flattish kind of trends? Because, I mean, the underlying situation has not really changed very much. Paytm is down about 8%. It's a sentiment hit in terms of actual financial hit is not very much. But, I mean, the language in that order from the Reserve Bank of India, very, very sharp, very, very sharply worded order with regards to what they've seen, and the way it's been framed, I think, is making some sort of a difference as well. Mangalam.
Well, a bunch of stocks that make the morning. Sun Pharma is now increasing its gains. It's up around 3.5% right now. Opened mildly in the green, then is adding on to those. M&M Financial up 10% on their numbers right now. So big up move is what we're seeing. India Cements as well. The EBITDA being at a multi-quarter high out there. That stock too has surged about 7-8% in the morning straight of the gates. Hindustan Bank up 6% on the numbers. But the pharmaceutical stock of this morning is not Sun Pharma. It is Cohance Life. Umang Vohra's appointment as the leader of the company has taken that stock higher by almost 10% this morning. So it's a big move that we're seeing out there as well. But on the way down, obviously, it is Paytm, which is down about 9% as we speak. We are seeing some profit taking on names like RBL Bank, AU Small Finance, and Strides Pharma as well. But by and large, it is all results specific and perhaps order win specific as well. Indian Hume Pipes is the other one, which is seeing a big up move on the back of an order that the company is on. Nigel.
Well, that's right, Mangalam. Brilliant move is what we're seeing on India Cements. Ultratech Cement, they've got the knack, right? They've taken over this asset. They've scaled up the EBITDA per ton towards around 500 rupees. And they're halfway through, because they said in the next few years it goes to around 1,000 rupees. So India Cement, that stock is up and about. The debt is under control. They're looking at expansion. India Cement is the stock that we're talking about, up 6%. The only fear is at some point of time it could get folded into Ultratech Cement. And if that's the case, normally you see that the parent, the ratio is normally in favor of the parent. So that's the fear out there. But beautiful move. What a turnaround of events. Growth in high teens. Profitability improves. Captive power as well, has moved up. So splendid turnaround of events out there. Jaiswal Neko, I think we were one of the lone voices who had explained the company at around 40-45 rupees, close to around 10 months or so ago. Well, they reported good results, record EBITDA. They've done a preference issue via warrants as well at around 90 rupees, worth around 200 crores odd. Keep in mind, there's no institutional holding in the company. And the promoter entity in the past as well, has flattered many times, but they haven't delivered. But this time around, it appears, going by the numbers, going by the operating cash flows as well, is looking quite good. And the net debt number from 2020 till date, it's come down from 5,000 crores to around 2,000 crores. Explains why that stock is up and about. The other one is Tanla. Good numbers out there. On a sequential basis, those, the revenues have grown by close to around 5%. On a year-on-year basis, the revenues are up by close to around 15%. And margins are holding steady. The street likes that, so that's flying away up close to around 12% as we speak. A few more notable movers. Just take a look at Sun Pharma. It seems the shots are getting squeezed out here. As I said earlier, the stock had already corrected a good deal getting into this deal. The street had a bit of a sniff that the deal is in the offing. So for the time being, it appears the shots are running for cover. The management says that it will be EPS positive from the first year itself. So the street likes that. But Cohance, that's really the stock of the morning, up 16% as we speak. We have a top boss, who was at the top of, very big pharma company that's come in there for Cohance. Stock has corrected big time from the top, 16.5%. Wow, what a welcome.
Yeah. And Hormas tells us that before this development that took place, Cohance was actually the worst performing stock in the small cap index in all of 2026 so far. It was actually down 31% this year before this news has come by, and now it's curtailed its yearly losses to about 21%. Still an underperformer, but what a news.
And what a difference one person, at least, for now, can make. At least that's what it seems like. We'll see if it holds. Harsha Upadhyaya is with us. He's CIO, Kotak Mahindra Asset Management Company. Harsha, good morning. Great to have you on the program, and thanks for joining in. As a fund manager, how would you treat an acquisition like what Sun has done? I know you can't talk single stocks, Harsha, but let's consider company ABC doing an acquisition for $12 billion, taking on $8 billion in debt. What would your reaction be?
Good morning, Prashant. as you rightly mentioned, I will not be able to speak on the particular acquisition, but clearly whenever we see these acquisitions, we look at incrementally what it's going to add to the acquiring company, whether it's going to bring in synergy, whether it's going to reduce costs and increase margins, how soon the company is going to break even on the acquisition value. And these are the kind of analysis that one usually does. So that remains same in every case, I would say.
Okay. So any opinion on this one? Broadly, roughly, top down, if you've looked at this, Harsha, this specific case? Not asking you whether to buy, sell Sun, but any thoughts?
Clearly, it's one of the large transformative acquisitions, I would say. Rarely you see Indian companies acquiring such large companies outside India or even inside India. So to that extent, of course, this is one of those large acquisitions. But beyond that, I will not be able to comment on that.
Right. Just to complete that loop on the pharmaceutical space, Harsha, Cohance as well, the earlier Suven, has seen a leadership change. Again, typically, I've noticed this for the consumer companies at large, where every time there is a leadership change, things definitely move. It seems like a bit of an inflection point, especially for a stock that has been struggling. Would you say the same of something like Cohance Life or, other sectors as well, where after a struggle, there is a notable leader that comes in? Do these moments then become inflection points for the stock?
Mangalam, again, I'll start with the same response. I have no views on this particular management change, and I will not be able to comment on it. But clearly, when we analyze stocks, we do look at significant management changes, especially as you rightly mentioned, if the company is going through a bad patch and then there is a change in management, what it could bring on table is something that we closely evaluate. Every time it may not be a success, but clearly this is a point where one needs to reevaluate all the parameters and take a fresh look at those companies. That's exactly what we do in each of the cases where we see significant changes in terms of the management or even in terms of the strategy itself. So even in this particular case, that's what most investors would do, I guess.
All right. Hi, Harsha. Good to see you. Let's talk about the market construct on the whole. We have gone through a period of underperforming, if you compare it with the global peers. Hopefully, earnings come back. The problem is, this war has come out of nowhere. And the initial part of 2026, all data points on ground were pointing to a good recovery, both on the economic front, which would translate into good earnings. However, now with Brent crude prices at elevated levels, how are you feeling about the Indian markets? Do you think we're just ignoring all this bad news and, just climbing the wall of worry and ultimately, things will catch up? Or do you think the worst is behind and hopefully the war settles out and we chug along from here on?
Nigel, if you step back and see a couple of months back, clearly a lot of things were becoming supportive for the markets. For example, macroeconomic environment was very, very benign. Crude was trading at $60 to $65 per barrel. Tariff deals were signed between India and various other regions. Overall, it looked like finally we are likely to see earnings trajectory moving up, and which was the case sequentially as well. Last couple of quarters, we were seeing a slightly improved earnings trajectory as well. And that was the hope that sequentially for financial year 27 and the financial year 28, you will start seeing recovery in terms of earnings growth. However, after the war, things have suddenly changed a bit. Crude has moved significantly higher, which means that there could be impact at the economic growth level. There could be impact on company growth as well as margins, all of that. Having said that, I think most of this would be very, very short-term in nature. I don't think it's going to extend beyond a certain time frame. That's the hope as well. So some companies have already witnessed the ill impact of war in the Q4 results which have come through. Some companies may have withstood that volatility during Q4, but may see that in Q1 results when we go to the next earnings season. But I think this is something that investors will have to clearly understand and not panic at this point of time. And usually, if you go by history and look across various wars, including our own Kargil war or even Russia-Ukraine war, any other war that you look at, markets typically bottom out even before the war ends. So clearly, I think if you are waiting for the war to end, then you are paying a price in terms of valuation premium for that clarity. So for all long-term investors, I think this is a good place to be in. You can keep building your equity allocation over a period of time. Nobody knows exactly how this is going to turn out on exactly at what point of time there will be a ceasefire, etc. But I think that's how equity markets are to be dealt with. I mean, when you have uncertainty, you keep participating with a long-term in focus. And hopefully the long-term wealth creation is going to be superior in that case.
Okay, all right, Harsha, you know, earlier this year when we had connected, you were making this point that the real estate cycle is already midway through. Normally you see it for 8-9 years and we're already in year 5. And that's why you said you'll continue to remain your underweight stance on real estate stocks. And that's played out quite well because from the frontline names itself, to the smaller names, all of them are corrected 20, 30, 40% as well. What's your view on this theme?
Nigel, we still remain with the same view. Apart from the mid-cycle view that I had presented earlier, there is another overhang, which is about what kind of new employment generation is going to happen in IT sector. Clearly, over the last year, some of the top IT companies have actually seen a reduction in the headcount. And very unlikely that you will see very large headcount addition in IT sector. And also there is a bit of a question mark in terms of the overall IT sector growth. So given all of this, one large segment which was leading to real estate growth may be under some bit of pressure even in financial year 27. And as we had spoken earlier in the interview, the prices have significantly shot up. While I agree that on the interest rate front, the affordability has increased, but the pure capital appreciation has been much higher. So to that extent, that will also come into picture. So you need to be a little more cautious on real estate despite the correction in the stock prices in recent times.
Are there any opportunities which are emerging in the energy and oil price related space because of this war? Because, a lot of people believe that maybe while the impact of the war on the markets may not increase as much going forward, and perhaps the markets may have bottomed out. But what's for sure is that, for the very near term at least, oil prices would stay elevated. So there are perhaps opportunities on the back of that on upstream oil energy companies. The converse on that would be those who are using oil. And similarly, typically related industries, you have fertilizers, you have chemicals, all of that. What's your thought on this play?
Mangalam, if you go back and look at how the government has dealt in history in terms of crude price volatility, while on paper the upside should be there with the oil exploration companies, that doesn't really happen in practical terms. There could be cases of windfall tax or such taxes going forward, which means that some of the negatives that you see on the retail side or on the oil marketing companies' profitability side is going to be cushioned by the supernormal profits that the exploration companies would make in that case. So I think typically it doesn't make sense to just look at the beneficiaries of this crude price increase because in our view, this is not a permanent structural kind of a situation. It's going to correct. The only thing that we do not know is at what point of time it's going to correct. I mean, there have been 4 or 5 cases when crude has moved beyond $100 per barrel. And in each and every case in the past, it has corrected because fundamentally the demand is not increasing at a rapid pace. So given that and also that the geopolitical issues are going to keep global growth in check, we are unlikely to see any change, any significant change on the demand side. Yes, there has been a logistics issue. There has been some supply issue on the crude. But I think structurally, we cannot argue for a sustainably higher prices. So to that extent, it's better to ignore the impact of crude for a moment and look at the overall basket and see where companies have withstood such cycles in the past, where the valuations are in our favor. And it's better to keep a diversified approach rather than any thematic or sectoral focus, because typically in times like these, a diversified approach with valuation in mind is what helps investors to kind of manage volatility, I would say.
Okay, all right, Harsha, we'll leave it there. Thank you very much for joining us. Good speaking with you and appreciate your time here on CNBC TV18. I think we have our next discussion. Rahul Saraf, Head of India Investment Banking at Citi is with us, and Bhavesh Shah, MD and Head of Investment Banking at Equirus Capital, is also with us on the program. Gentlemen, great to have both of you here. Thank you very much. I mean, I think it's great that we have both of you with us on a day when we're reporting on one of the largest transactions in the pharmaceutical industry. Rahul, you're smiling. So I have to ask you this. What did you make of it, Rahul? Any thoughts?
No, I think you're right. It's a great day to be on CNBC today. It marks history for India. It's the largest outbound acquisition for any Indian company to make out of India, and it's a very powerful acquisition. And we are sure that this will be very, very good for Sun going forward. A lot of synergies, a lot of as Dilip said, this is going to be the next chapter for Sun going forward, and going to create a lot of synergies as well. So it's a very big transaction, and it's a great time to be on this call.
Rahul, is there a way? I'm just kind of this is a slightly, and we'll get into individual sectors where deals are happening, etc. But is there a slightly different way in which markets are going to treat large acquisitions? Because I mean, one of the criticisms has been that the focus has all been on, this is not about pharma or this deal or anything, that maybe companies are not ambitious enough and the market doesn't treat large acquisitions kindly, and in many cases it is not. High debt, and especially if it is overseas, it's difficult to manage and sprawled out, etc. Right? Is there a broad change of thinking which is emerging, Rahul, especially if an acquisition gets you new technologies, new areas and things like that, or not really?
So Indian companies have the ambition of becoming global, and no other than a large company like Sun to do this transaction. They have presence around the world. They know how to manage global businesses and global teams, and they've actually done fantastically well in their earlier acquisitions as well in terms of integration. So it's a structural shift to the positive, going to the next orbit and then to the next orbit further. The balance sheets are strong for large companies like Sun Pharma, and similarly, there are other large companies also that we'll see that with strong balance sheets, big ambitions, they would look to go to global geographies, global markets, and then capture the synergies that they can, given their own strengths.
Right. This aside, there has been a fair amount of M&A activity in general, be it, institutional capital backing some of the financial companies, or, large cap FMCG companies going ahead and buying D2C players. You have a bunch of them, IPL deal unlocking, Rahul. So a lot of these things have happened. So far of what has happened versus what is likely to happen, can you give us a whiff of what more is in the pipeline?
Well, I would say that you had last 5 weeks, you had probably 5 transactions in the market, right? IKS acquired a company in the US. We were involved in that. Hire, of course, closed, where a Chinese company partnered with Sunil Mittal and Warburg. You had another transaction with Sanmar, where they acquired the stake for Fairfax. So lots of transactions happening almost every week. And each one has a different theme. Each one has a different motive. Each one has a different trajectory. There could be consolidation. There could be spin-offs. There could be outbound acquisitions, MNC exits, MNC entry. So lots of different varied reasons. And I would say the deal activity will continue across sectors and across themes. There's no one theme. India is fairly large and very diverse. So there's no one theme which will play out more than the other, I think. And the deal activity, the good thing is the deal activity will continue. And we're feeling very good, very bullish about the deal activity, both in the capital markets as well as M&A for the rest of the year as well.
Bhavesh, would you want to add any specifics to what Rahul has said? He said that obviously deal activity will continue. Your thoughts on the Sun Pharma deal, and thereafter, what kind of deals are we likely to hear in the very near future?
Thanks for having me on the show. I think this is a great acquisition by Sun Pharma, in my view.
Stronger companies in India have aspirations to be going global, and this is one of the methods in which they can do that. Not only it helps them acquire new products, new geographies, it kind of helps strengthen their overall strategy for growth on an inorganic basis. I would just add to that, in terms of the trend, I think we will continue to see a lot more strategic-oriented acquisitions. I think each company will have their own strategies, either to scale up or either to kind of add companies to kind of add to their combination of product and geographies and markets. So I think this is going to be very positive. But I think what I would say is also companies need to be also very calibrated, especially when it comes to acquisitions in the foreign markets. There have been examples of companies all with good intentions acquiring companies abroad. But I think some of them have played out, some of them are not properly played out. So I think it's very important to be very, very calibrated and make sure that the post-acquisition integration strategy is in place.
Bhavish, just one thing. If you looked at this particular transaction morning, is this a turnaround bet? Because look, Sun has about a $2 billion EBITDA, growing at 13-14%. The acquired entity's got a $2 billion EBITDA, but no growth. So overall, post-acquisition growth rates will come off sharply for Sun. And then there is the debt. So is this the bet that Sun will be able to turn some of these assets around and inject growth into the acquired entity? That is always harder, right? Than acquiring something which is already humming along well.
Absolutely right, Prashant. I think it's not easy. It's very easy to kind of do, let's say, an acquisition, but I think the post-acquisition integration, how does it weave into the overall strategy? How does the management capability here in India is able to kind of inject good amount of energy so that the growth overall happens, the synergy benefits are extracted. I think this is the what I would call is the companies who are able to successfully do that, they earn something known as a consolidator premium. So as I said, it's easy to acquire, but very difficult to integrate. So and consolidate. So companies who will be able to do that, will get to get a premium from the market, from the investors. But yeah, it's going to be hard. It's not a very easy task for sure.
All right, let's just then complete this with the Jio IPO. Rahul, going back to you. I'm not sure whether it will be an IPO or how in what manner will the Jio platforms list. What we know from the Reliance earnings release is that they have accelerated their move towards Jio platforms listing. What has your sense on this been? Obviously,
I'm going to deflect that to Bhavish because since we are on the IPO, we'll not be able to comment much on that. I'll deflect it to Bhavish.
Bhavish, you want to ask a question to Rahul? He's on the IPO.
Sure. No worries. I think it's one of the most looked up to IPO in India. I think India has been a beneficiary of the very big digital wave, and that has been enabled by Jio. Frankly, the way to think about this business is it's not just a network which provides data, but I think it goes much beyond that. And I think the company has been instrumental in creating that wave in India. My sense is it will create good amount of unlocking of value for the overall ecosystem within Reliance. And this will be a sought after an IPO from the investor side.
Okay, all right, gentlemen. We appreciate you all joining in and having a very, very effective chat. Interesting point of time as well. A lot of deals, IPOs in the works as well. We look forward to catching up with you all rather soon. For the time being, have a good day ahead. Well, we'll slip into a short break. On the other side, we'll get chatting with the management of Hindustan Zinc.
I think we can go to it now.
All right. I think, let's go across actually to the management of Hindustan Zinc. We have Arun Mishra, the CEO and whole-time director, who joins us on the show. Hi, Mr. Mishra. Good morning. Good to see you, Vin. Well, we've got a few questions with regard to your business. So let's start off with the more glittering part of it. That's the silver business. We saw pricing move up one way, and then it came down considerably. What is the estimate on silver prices for FY27?
See, I guess silver will touch the new normal. What used to be the normal of $30 to $40 per troy ounce will be the normal between $65 to $75 per troy ounce, and it can then fluctuate up and down, but I guess it would remain there. So our job will be to now focus on silver production, and this year, if you look at, we have done 627 tons, but we have also sold about 37 tons of silver through the concentrate route. And if we bring that into production, I would have produced 666 tons. So next year's guidance of 680 tons is very much achievable, and that should give us a earning at the current level of $70-75 a troy ounce. About 50% of the EBITDA would come from silver.
Oh, that'll be interesting. 50% of EBITDA from silver, and you're saying that now there's a new normal with regard to silver prices. However, the tricky part is how much of your sales are hedged. In the past, you'll have hedged at lower prices. So what proportion of your silver sales are hedged as of now?
No, so we are not hedging any more silver. We had hedged about 10%. Whenever we hedged about 10% of the silver quantity, and we are not going to hedge anymore.
All right, Mr. Mishra, I wanted to ask you about the 680 tons. Now, last year was a bit of a weak year. Are you being conservative on this silver volume target of around 680 tons?
680 number, no, it's not conservative. It is see, we are also maximizing on the zinc production. If you look at last year numbers, actually we produced more zinc compared to FY25. But total metal looks like flat, 1048 versus 1052. But actually the zinc production is more and lead production is less. And we are financially benefited there because of lead prices fell down, whereas the zinc prices went up. And we would continue with the same strategy this year, and hence the silver is the optimized number. More lead production will give more silver, whereas we will keep silver at 680, produce more zinc metal, and then get much better EBITDA next year.
Okay, got it. Interesting way then. Now, you're focusing more on zinc in the past year and lesser on lead. And, that worked out perfectly with regard to prices. But let's focus on silver. What is the global demand supply scenario as of now? Does a deficit continue to exist?
It continues. It continues. And with the current upheaval in the global geopolitical situation, more and more push towards investing in precious metal. And we are seeing the effect. The prices would remain there. That's why for at least next 1-2 years, the investors push to the precious metal. At the same time, the demand is also growing as we see more and more electronics, including the warfare that we see. It's all electronics now. So more and more silver will be consumed.
All right, Mr. Mishra, we have spoken enough about silver, but that's such a large proportion now of your EBITDA. So that's why we're putting the spotlight on silver first. Let's turn our attention to zinc then. Could you tell us what's the outlook in terms of prices? And also, since costs have moved up, is there an upside risk to that guidance of around $100 per ton?
See, our cost, 44% is by the power cost. So in that power cost, since if you look at our RE power consumption, we are at 18%. And now from the month of June, the entire windmills will be commissioned and the battery commissioning is already going on. We expect about 30% of the RE power coming in. And this time this power is also round the clock. And so our cost of production will be under control, around $1,000 per ton. The impact of about $25 to $30 per ton we have taken into account because of the global situation that we are currently encountering. So that we have factored in that. And otherwise the volume impact will also get, we are getting 1.1 million ton compared to 1048 this year. That will also come in handy for reducing the cost.
Okay, what's the zinc price outlook though, sir?
I don't give price outlook, but since we have been speaking for a long time, it's anywhere between $3,100 to $3,300 a ton.
Okay, got that. The other kicker is going to come from your byproduct. Sulfuric acid prices, they're booming. Could you put together, rough math with regard to how will this impact your EBITDA number for FY27?
The sulfuric acid, this is, at times the sulfur prices go up and this results in price of sulfuric acid going up. And this has helped us a lot. Not that we are making business plan based on that. We did about 1 million ton of sulfuric acid last year and it's 1.1 million ton production. similar amount of sulfuric acid will be sold next year. But also now that fertilizer plant will, the moment we start consuming, the nature of acid will change. Initially, we will convert about 1/3 of the sulfuric acid into phosphoric acid, and if phosphoric acid fetches us even better price, we will do that. Otherwise, sulfuric acid will remain. And it should be around 2% or so of the EBITDA level. And we are not really basing much on EBITDA side. We are looking at more as a cost management side, because this is netted off in the cost of production. And so we are looking at acid as a way of counterbalancing the likelihood of increasing cost because of the current geopolitical situation.
Well, a byproduct like sulfuric acid contributing 2% of the EBITDA number is a rather large number as well, Mr. Mishra, so that's come as a good kicker. But besides that, what about the expansion plans? You have already announced phase 1 of expansion, but the street is waiting by for phase 2. When is that likely?
Our phase 2 will, I think, somewhere around July or August board meeting, we should be able to get it through. See, the design, originally we were thinking of having multiple smelters and different locations. Then we have now finally zeroed in on the same location, Debari, where we are putting up the 250 kiloton smelter. We'll put up another 650 kiloton of smelter there. So that itself, that complex itself will be more than 1 million ton metal production complex. And only the mines will be dislocated, and that will help us to optimize the capital cost and also put in best of the technology in one place only. So that design is almost complete. We should come out with the announcement for investment by the month of July or August.
Mr. Mishra, you know, things are looking up for you with regard to prices. You're looking at scaling volume as well. Don't you think it's an opportune time to go ahead and unlock some value in Hindustan Zinc, maybe separate the silver business?
I'm sure with these current silver prices that we have, it does call for re-looking at the proposal of demerger of Hindustan Zinc. But right now our hands are full. Vedanta demerger is in place, and once that is done, I'm sure that will be the right time to look at Hindustan Zinc demerger.
Okay, first Vedanta demerger, and then you look at Hindustan Zinc. Can we expect some movement though on Hindustan Zinc's demerger in this fiscal itself?
At least discussions should start.
Okay, discussions will start. We'll wait by Mr. Mishra, but it's always a pleasure to have you on the show. You're sounding reasonably optimistic about business for this particular year. Everything firing, whether it's silver, zinc, as well as your byproduct, sulfuric acid. For the time being, the stock as well has moved to the high point of the day. And Vedanta has also moved behind it because, you know, the first entity that will list in the next few days will be primarily on the value of Hindustan Zinc. So that's why we're seeing Vedanta as well has spiked up in the last few minutes ahead of its record day.
You know, the other one is Sun Pharma, Nigel. I mean, first, of course, the fact that it moved up 2-3% and now it's up 7.5%. So we want to find out what did, what are the top 5 takeaways from what the Sun Pharma management has told analysts, and we'll have Ekta join us in just a bit to help us do that. We'll take a break here. We'll come back. We'll, speak with the management of Shriram Finance on the other side, and then we'll have Ekta join us on that Sun acquisition as well. So for now, Umesh Revankar of Shriram Finance with us in just a bit. Okay, welcome back. I think we have the manager of Shriram Finance with us. They reported their fourth quarter numbers. Net interest income grew 21% on a year-on-year basis, though margins compressed slightly on a quarter-on-quarter basis. Assets under management also grew about 15%. We have Umesh Revankar, Executive Vice Chairman of Shriram Finance with us. Mr. Revankar, good morning, sir. Thank you very much for joining us. Prashant here. So, it's an excellent quarter and the performance is fantastic. My question, sir, is... and we'll rewind back to the numbers, what you've reported, but just one forward-looking item, which is that there is widespread expectation that there is a large fuel price adjustment which is imminent upon us as soon as the elections end. In the past, sir, when that has happened, and is particularly important for your business, the segment that you operate in, does that make a even a short-term dent if the adjustment is large? Because the shock this time is very large in terms of international crude prices.
See, any increase in retail price is going to have certain impact, but how it is going to come, how it is going to be introduced, is something which we are watchful. If it is a gradual increase over the period, then there is enough time for everyone to adjust their cost, that is logistics cost. The transporter can pass on to either customer or shipper, and the shipper can build in his business model, and the distributor can pass it on to the customer. See, these are all the things which happens. So if it is done in a gradual manner, if there is a surprise, if there is sudden increase, then there is a little time for adjustment. Then temporarily, till the adjustment happens, then there is an impact. So that we need to see how it is going to happen. The way we have seen, because 91 there was a crude shock, then there was a Kuwait war. Again, 2012, there was a surprise increase in the fuel price for a couple of months. That the Red Sea challenge was there. So these are the two past incidents where the increase in crude price resulted in the retail price, and we have seen how it is impacting. I believe if it is the gradual increase, then the surprise element is less, and everyone will be able to manage the situation.
Right. And, you know, in the conference call, you did say that if there is any sort of pressure on borrower affordability, that's something that you will see only after November or December. The extent of that remains uncertain. We take that point. Mr. Revankar, you know, I just have a question on asset quality going ahead, because while on the one hand, your AUM growth guidance of 18% led by gold, and you have PVs, CVs between 15 to 18% stays, what is the kind of asset quality move you see in the next few quarters? We say that for three reasons. One, other NBFCs have said that maybe, you know, the next couple of quarters will be absolutely fine. The current rise that we've seen in, you know, the uncertainty because of the war, a lot of problems will start to emanate 2 quarters down the line. Do you see that? And in your MSME portfolio in particular, gold prices are off highs as well. So all these factors do point to maybe some sort of latent stress emerging. Would you agree with that?
See, we have been extremely cautious. In fact, in MSME, we have slowed down our disbursement. We have been trying to focus only on by additional security being there in MSME lending. So we slowed down a little in the last 2 quarters, mainly because it initially started with US tariff being hit on certain MSME segments. So we have been very careful. As of now, we don't see a challenge. Even in commercial vehicle segments, we are not seeing any challenge, because ultimately what is important is economic activity. If the economic activity remains at a certain level, then everyone is able to pass it on and have a comfortable journey. So I think the economic progress, GDP growth has been good for us. And as long as it remains above 6.5, I think their impact will be much lower. But if the monsoon has a certain impact, there will be temporary impact post the October, November. That we need to see as and when it happens. Otherwise, I don't really see a big impact. Maybe marginal movement between stage 1, stage 2 could be there.
Right. And your 18% AUM growth guidance, I suppose, factors in some sort of potential negative impact as well. You've been conservative here. Is that how the street should read it?
We did give 18% growth guidance much before the commencement of war and the negative news on the monsoon being below normal. But I do, at this stage, I believe that we'll be able to maintain that growth projection. However, as and when there is a right impact, then we'll be able to revisit it.
And what about margins? Because your cost of funds, because of the large money coming in from MUFG and all the subsequent rating upgrades that happen, they've come down. How do you look at NIMs going forward? Do you intend to pass on the additional benefits to the consumers and keep your NIMs at a certain price band, or maybe at some point look at increasing your NIMs as well, given the sort of uncertainty that is there?
See, we don't really control the NIMs. So what happens is, If you look at my numbers, last year, same quarter, we were at 8.25. Now we have moved to 8.61. And this improvement has happened by two counts. One, we have reduced the excess liquidity that was there on our balance sheet. And the second, the incremental borrowing cost coming down. Both has happened. And this has happened much before the rating upgrade. So the advantages of rating upgrade is going to happen in future. That is, we are going to get benefit of that. And that will definitely improve our margins. But certain increase in that margin will be passed on to the customer to acquire make the customer ensure that they remain with us. Basically, we would like to retain the customer as long as possible, as and when he upgrades and buys new vehicle or larger fleets. So that's the idea.
All right. Hi, Mr. Revankar. Always good to see you in, sir. So you're saying the incremental cost of borrowing is at around 7.2%. Is that correct?
Yes. Last quarter, it was at 7.2%.
All right. Besides the operational performance, there are a couple of questions that your shareholders are waiting for clarity on. So let's get straight to that. One, is MUFG looking at buying an additional stake, from the promoter entity, or are they looking to up it? Point number one. Could you clarify on that?
No, there's no discussion on that right now. We have just done the first tranche of 20%, and that is what we have finally agreed. There's nothing like additional increase at this stage. There's no discussion, and I don't think anything is there in the near future also.
Thanks for clarifying on that, sir. What about the open offer price? Is there any plan to revise it higher? Some on the street believes that it's going to be much higher than what the earlier deal got done at. Your take?
I said there's nothing in hand or nothing in discussion.
Nothing. So both those two, you're saying there's no talk whatsoever?
No.
Okay, let's focus on a couple of other aspects then, sir. What about the credit cost? What kind of guidance could you help us out with that for the next 2 years? And also in ROE, there was some hope that it will improve, I think, to around 13-14% or thereabouts. What's the trajectory you see on that front?
See, as far as the credit cost is concerned, we would be happy to maintain and particularly at current level, because we believe we have reached the best. And if the environment helps us, if we are able to maintain that, we'll be very happy. That's for first thing. And on the second question was on
credit cost and ROE, sir.
ROE, sorry. As far as ROE is concerned, since equity infusion is there, ROE will definitely come down because of that. And we expect it to come down to around 12% level, then start inching up over the period, because ROA temporarily goes up and ROE has come down. So ROE to go up, then we should start using the equity and the balance sheet growth, both we have to do. So I'm very, very happy to go back to 16 at the earliest.
Okay, all right, Mr. Revankar. Thanks a lot for running us through your guidance with regard to how you see, your company progress for the remainder of this year, and also clarifying on a couple of issues like the open offer and MUFG is not in talks to buy an additional stake. Wishing you all the best for this quarter, and we'll wait by in case there is any kind of revision in the guidance towards the end of Q1. Well, the markets are holding strong as we speak, actually. We're up close to around 200 points, so that's pretty good news. Sun Pharma is clearly the stock of the morning. That's bursting away as we speak. And Jefferies has come out with a note on JSW Steel, and the street is taking note of that. They're talking about pricing improving. They're also highlighting that exports out of China actually have reduced, which is a tailwind for the entire global ferrous sector. So JSW Steel has moved up. And Sarda Energy from the broader markets, that stock is now up close to around 4.5%. It saw a sharp correction, and now that stock has pulled back a lot of it. The power business is firing, and they have exposure to longs. I guess the street is reading that through as well. Vinay Rajani of HDFC Securities joins us for a technical check. Hi, Vinay. The bulls will be very happy this Monday morning. Crude oil prices are still holding at elevated levels, but the Nifty is holding with a gain of around 200 points. What's your view? Would you advise taking some money off the table, or do you believe if the recent lows are defended, then we could trend higher from here on? So trade on the Nifty and a couple of fresh trading ideas.
Yeah, so good morning. So in the month of April, we have seen a rally of 2,200 points in the Nifty from the swing low of 22,200. It went up to 24,600 and we have seen 800 points correction. Today, we can see that it is up by more than 200 points. And during this rally, many leaderships have changed and some of the sectors are really outperforming. And they are actually behaving like the negatives are already being discounted in the market. So metal space is one of the space, power, PSU, these are the sectors which are continuously performing well. So the structure of the market is quite bullish, sector specific bullishness is there, and we have to select the stocks from the strong sectors. And there are many ideas we can generate from to generate the alpha from here. So we are bullish on the markets right now, and we feel that as far as Nifty is concerned, 24,800 should be the next target for the Nifty. And the Friday's low will act as a strong support, which happens to be around 23,800. So traders should hold on to the long position with a stop loss of 23,800. As far as ideas are concerned, we are bullish on metals. So Jindal Steel and Power, this is looking extremely good after some running correction. This has resumed the upward run. So 1289 is the level around which one can take a fresh entry. 1260 should be the trading stop loss. On the upside, we are expecting a target of 1350 in the short term. The second stock also, we are taking it from metals and mining space. That is nothing but the NMDC. So NMDC has given a fresh breakout on the medium to long term charts. And we feel that this rally is going to last for a bigger gains. But for traders also, one can take alpha from here around 90.50. One can take long positions. 88.50 should be the stop loss. On the upside, we are expecting a target of 94.
All right, take that point. Thanks a lot, Vinay, for joining in and giving us your view on the markets and individual stocks. But let's put the spotlight once again on Sun Pharma. The stock up 7.5%. Ekta joins in. She heard into what the management had to say over the conference call, and she brings us all the key takeaways. What is it, Ekta, that the management said that has the street so excited? 7.5% higher for the stock.
Well, you know, the street possibly believes the Sun Pharma capabilities that they've shown in previous acquisitions such as Ranbaxy as well as Taro. Now, a couple of important key takeaways from the conference call where the management did say that they're acquiring more or less the same size of a company as Sun, but around 20 to 22% of Sun's value. Now, the acquisition will bring quite a significant amount to Sun Pharma in terms of, their presence. Commercial presence in 150 countries, 18 countries with $100 million in terms of revenue. They will provide presence to them in China, which is one of the biggest growing pharmaceutical markets today. Organon has around $800 million in sales and 8 brands present there. It'll make Sun number 3 in women's health, increase their presence in biosimilars, where they will have around 7% in terms of combined sales, increase their innovative medicines portfolio to 27% of sales versus 20% that exists currently. And they will also look to turn around the established brands business, which is basically the bulk in terms of Organon's business and will be the bulk of the combined entity at 51% of sales. It was down 4% in CY25. They're looking to possibly look at around single-digit growth within the established business segment going forward. Now, debt, it is an issue. But one of the reasons why the stock is actually higher is because the entire enterprise value is lower than what the street had anticipated, because the net debt is at around $7.6 to $7.7 billion. They have made a divestiture of around $40 million, which will make them a little more comfortable in terms of the debt position. So what they have indicated is that, Mr. Dilip Sangvi was very clear that they will be focused on paying down the debt as soon as possible. They will be looking at working with lenders on refinancing options as well. The net debt is currently at around $7.6, $7.7 billion for Organon, like I mentioned. So they will look to possibly bring that down in the next 4 to 5 odd years. The combined entity debt at these levels at around 2.3 times net debt to EBITDA. They will also have a free cash flow, which will be at around $2 to $2.5 billion, which will help in terms of easing the debt burden. Synergies of around $350 million, which will be realized over the next 2 to 4 years. Acquisition will be EPS accretive from day one. They will assess cash flows and come back on the dividend payout issue. And they will also they're looking at Organon basically as a long-term play and not something which should be looked at within 6 months to a year.
All right. Thanks very much, Ekta, for that. And some of the takeaways really very focused on repaying the debt down as fast as possible. I mean, very explicitly indicating to the street, basically acknowledging that the debt is very large and they'd be very focused on paying it down as soon as possible. I think that perhaps an area of comfort. The $350 million synergy benefits perhaps also the market liking very well. It's a large number. I mean, if they're able to realize it, and I think that those are the two reasons why perhaps if there were some shots in the system, or perhaps people were, fearing the stock perhaps will go down, has gone the other way and force some of the short covering, etc. We'll know by the end of the day with regards to data in terms of what has happened. But it's a thumbs up for today, for now, as far as the deal is concerned. Manisha is here on the other side. Commodities in focus. Stay tuned. Coming up.
Welcome back. It's a very, very good morning from a bullish perspective. The breadth of the market is something that's standing out. You have close on 5 stocks that are advancing for just one stock that's declining. But as promised, let's shift focus to the commodity markets. Manisha Gupta joins us to tell us what's going on there. Manisha?
Well, thank you for that. I'm looking at metals as a space. Remember, the US-Iran war has entered week 9. The peace talks between US and Iran have kind of stalled. We've been hearing statements from both sides all over the weekend. And it also is about the Strait of Hormuz, which mostly has remained shut since Feb 28th. Iran war has created some kind of a turmoil in metal as a sector as well. But importantly and interestingly, what we also are looking at support from metals is the fact that the China restocking is happening on every dip. And this is majorly ahead of the Labor Day holidays in China between 1st to 5th of May. Take a look at the global aluminum prices, and we have been trading at around 4-year highs onto this one. We've seen 12% of gains come in for aluminum prices in the matter of last 1 month. Nickel is trading at a 22-month highs as well. Much of those gains actually have come in the matter of last 1 week. 10% of gains onto that one in last 1 month. And then you have copper prices trading very close to those 2-month highs. 11% of gain putting in by copper as well for the last 1 month. Now, the major reason for this really is that one, West Asia produces nearly 9 to 10% of aluminum, and much of that has been contained within West Asia as well. The Gulf also accounts for 25% of global sulfur production. Now, this is what is required as a key input for many of those miners. The miners for copper and nickel use it. 1/5 of refined copper, by the way, the production of that comes from solvent extraction technology on oxide ores. And for that, you need sulfuric acid. Nickel production from high-pressure acid leach plants also is requiring of sulfuric acid. And sulfur then in fertilizers also is nearly 2/3 of an overall global market there. So that is where sulfur seems to be getting divided. Agriculture clearly is a priority right now, and the miners really suffering from the lack of it. China, which is nearly 40 to 50% of sulfuric acid, has said that they will ban export of that from the month of May, also taking sulfuric acid up by nearly 50% in this year, and it's trading very close to all-time highs as well. Also, Macquarie, an interesting report from that says that $4,000 per ton is added to Indonesian high-pressure acid leach nickel production cost. And the interesting report from Radix says that $100 a ton rise in prices translates to 4% rise in cash operating cost as well. So this is another thing leading to higher prices in sense of metals.
Manisha, thank you very much for that. Time for a break. On the other side, the management of IDFC First Bank joins Lata to decode their fourth quarter numbers. Stay tuned, coming up.